What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll look at weekly charts of all the indices, the VIX and Bitcoin, and try to answer the question if we're going to get the bull breakout from here or continue into the downtrend. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so just a zoomed out view of the weekly chart of the SPX, you can clearly see we are still in our downtrending channel even though we did get a bounce this week. But just keep in mind, while we're in the downtrend, we're expecting every bounce to just be a lower high before the next lower low. So right now, if we zoom in on SPX, the lower high will be somewhere below 4158 with very strong resistance right around 3900 all the way up to about 4040. If we can break above 4040, it is very likely we will test that resistance at 4158. But again, if you're looking at price action, it is very clearly lower highs and lower lows. So we will need to start breaking above the 3900s to start looking like in the short term we have higher lows and higher highs. We've seen many bear market relief rallies all this year, and they've all been followed by more selling to continue down to the lower prices. And we still do have valid downside price targets at 3500. And if we break 3500, we could even see 3200. So you do have to keep in mind this is a downtrend until we get all the way back above the 4100s. And even then, there's still the possibility it's just a lower high before the next lower low because nobody knows exactly how long this bear market is going to last. So very critical support levels are going to be right around 3800 and this support zone right around 3700, because if we lose any of that support, we are very likely making that next leg lower down to 3500. So in the short term, you could stay bullish as long as we are above 3800, but just keep in mind that we did close right at that resistance at 3900, so that will be the next bull breakout requirement, will be the close above 3900. If the bulls can get above 3900, they could push all the way back up to about 4044. So do watch that as the next resistance if we do start breaking out above 3900. Now another thing to keep in mind is that we do have Q2 earnings coming up, so things will likely get very volatile coming up because we're either going to have horrible Q2 earnings and continue lower for that next leg lower, or we're going to find out that things aren't as bad as everybody expects and we could continue this rally. I think the odds favor more downside just based on the charts because we don't have anything bullish just yet to tell us that we are likely going to continue to trend higher. So just keep in mind, in order to get more bullish, we need to break out above 3900, and to continue down lower, we will need to lose this support zone at 3800. So watch those critical levels because they're only 100 points apart. So you're going to know which side of the trade you should be on by whether or not price action can clear 3900 or whether or not price action breaks down below 3800. On the NDX weekly chart, you can see that we did get the bounce up to the previous high right around 12,108, and we did not close decisively above that breakout level. So if we do get the clean breakout above this resistance zone, we could go all the way back up to retest the previous high, which is right around 12,683. And then if we start seeing weekly price action closing above all of that resistance, it will look like a bull trend in the short term. We do have some very critical resistance at 13,307, so that's also going to be another significant resistance. But just keep in mind that there is no way we're going to assume we're going all the way up to that resistance while we're sitting here at a resistance level that could lead to a double top on the daily chart. So it's really hard to be overly bullish with these charts because they are such strong downtrends and price action can barely clear any resistance before these next legs lower. So we need the bulls to prove everything to us through the price action. Otherwise, we need to continue to expect more downside. Now, keep in mind the NASDAQ 100 has been the weakest with a lot of those tech stocks getting absolutely routed. So if we are going to see a sustainable bull rally, we should see the tech sector leading the way. So I would expect to see relative strength in the NDX if we are going to get a sustainable bull rally. So for that reason, use this critical risk level down here right around 11,768. Because if we lose that support, the tech sector is still very weak and we are very likely going all the way down to 10,589, which means we're going to see the S&P 500 likely hitting 3,500. So if you want to stay bullish, use this level at 11,768 as your risk level. And if we break down below that level, you need to get out and get risk off for that next leg lower. And as long as we are above that level, you could stay bullish for more upside resistance. Even though there's no guarantee we have to get there, you have a very clearly defined risk level. And anytime you're trading, as long as you know where your risk is set, you can size your trading position accordingly and manage your risk. That way you're not exposing yourself to too much downside and too many losses in your portfolio. So there's a very clear risk level there, so feel free to use it, but do pay attention to that resistance to the upside. And if you do continue to see rejections from resistance, get ready for that next leg lower. In the Dow Jones weekly chart, we also saw a bounce this week, but a very weak bounce at that, and we did not even come back up to the previous resistance at 31,515. We need to clear that resistance to get all the way back up to about 33,000, but if we lose this support right around 29,800, we are very likely filling this gap to the downside, which is right around 28,495. It's very hard to believe that this bear market is just going to end without filling this gap below. So with this gap below, it does look very likely that we do have more downside coming, but there's no guarantee that we have to go fill that gap right now. We could always come back up to resistance and fill that gap at a later date. So watch that critical resistance right around 31,500. And if we clear that, then we could make that next leg higher to retest that resistance right around 33,000. If at any point we lose this support zone right around 30,000, look for that gap fill below, which would likely be the next leg lower. And if we continue down through the gap, the next support would be right around 27,583. You can very clearly see these indices are in very strong downtrends, so there's no reason to be getting overly bullish unless we can clearly break out through some of this critical resistance and maintain higher lows and higher highs to develop a bull trend. In the Russell 2000 weekly chart, you can see we also did see a bounce, but we're right back up to where we could just be double topping at the previous weekly close at 1768. If we get rejected from resistance, look for a retest of support at 1700, and if we lose that support, we're likely going down for the next leg lower with two price targets at 1578 and 1536. You can see the Russell 2000 is in a very strong downtrend, so we will need to break all the way back above the 1889 resistance level to get that higher high and develop a bull trend. So do not be getting bullish until we clearly see the bull breakout. As you can tell, the indices are looking very weak and none of them had any decisive bullish breakouts, even though we did get the bounce. So don't just get bullish because we see a green candle. We need to clear some of this critical resistance. On the VIX weekly chart, you can see the VIX is getting crushed back down towards that support around 24. But do keep in mind the VIX is still consolidating into a triangle, which is forming a wedge of higher lows and lower highs. So we need to see the VIX breaking down below 24 to be getting a lot more bullish, and then we should have a sustainable bull rally if the VIX can crush down below 20. However, if the VIX bounces off of 24 and spikes back above 30, that is more than likely going to be the volatility required in this bear market to send us down for that next leg lower. You can see year to date in this bear market, the VIX continues to spike out to about 35 every time we make that next leg lower. So get a lot more cautious if the VIX does start to spike off of this support zone. On Bitcoin's weekly chart, we are still holding that support zone right around 19,000, which is a very critical support because if we lose that support, it should be a quick chip down to the next leg lower at 12,000. If we can hold this support at 19,000, we could get a counter trend relief rally to come all the way back up to about 31,000 to retest that resistance. Or we could just come back up to the previous support, which was right around 28,000. So if we do hold support at 19,000, we could come back up to 28 to 31,000. Otherwise, look for that breakdown below 19,000 to send us down for that next leg lower at 12,000. You can see Bitcoin is in a very strong downtrend and it could need that final leg lower before it reaches a tradable bottom. So just get a lot more risk off or be ready to buy at lower prices if we lose this support. On the ARKK ETF, we're continuing to bounce, but we're still below our support trend line and still below our resistance right around $48, which will be required to see price action breaking above that level to get more bullish. If ARKK can start closing above this resistance for consecutive weeks, then we may be able to say the bear market in ARKK is over and we've seen the bottom, and then we could start to see if we can get back over that support trend line and start to develop a bull trend. But right now, this is great risk reward for the bears, and ARKK is still in a bear market, so I do expect to see bears in the ARKK showing up at this resistance, trying to drive prices lower yet again. On the bear bull survey, you can see we're at still very high bearish sentiment with over 50% of the people that are still bearish, which could mean that this bear market relief rally is going to continue to go a little bit higher before we see the lower high that sends us down for that next leg lower. Remember, when everybody is stacking up to one side of the trade and everybody is becoming bearish, it's going to be very difficult for the stock market to continue to go lower. Even though this doesn't guarantee anything, and I still suggest you follow price action, this is definitely something you should be aware of because there's just way too much bearish sentiment, which could mean that we continue to go higher in the short term. So jumping back over to the S&P 500, we are clearly still in this downtrend, so just know these critical resistance and support levels, and then develop a trade plan to act accordingly, whether we get the bearish breakdown below 3,800 or that bullish breakout above 3,900. You need to follow price action in this market because it's very volatile and nobody knows where the bottom is going to be, and nobody knows if we've already seen the bottom. It is very unlikely that we've seen the bottom for the year, and we are still in a very strong downtrend, so there are still going to be plenty of bears shorting this market at resistance. Keep in mind that doesn't guarantee we can't go higher and short squeeze the bears and go to the next leg higher of resistance, so you will need to be watching price action very closely. Just remember, this is a volatile bear market and volatility can work in both directions, so you need to have very great risk management in this market, and you need to have a very solid trade plan no matter where we go from here. Also, don't forget that I do have Bang Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bang beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.